right. Good morning, everybody. Good morning, all you magnificent melon heads of the world. Happy Thursday, everybody. Today is August 6th, 2026. Our top story this morning is the AI bros are back pounding the debt market once again this morning. Google and Softbank are both borrowing to sacrifice more money at the altar of artificial intelligence. And guys like me are just sitting over here screaming, cut the damn CapEx. Come on, guys. What are we doing here? Just cut the CapEx already. So where do we start? Google, $25 billion. That is the size of their latest bond offering. This news just hitting the tape today. They're borrowing $25 billion at 150 basis points above U.S. Treasury rates. That is interesting because, number one, U.S. Treasury rates have gone up since the last time they borrowed. And the last time they borrowed, they were only 120 basis points above U.S. Treasury rates. So they're borrowing more, and it's getting more expensive to do so. That ought to speed us on our way to success. Keep in mind this latest, more expensive $25 billion offering is on top of the $50 billion in bonds that Google issued in the first half of this year. It's also on top of the $85 billion in shares that they dumped on their market 2 months ago. And it's on top of the, what was the number yesterday? $1.1 trillion of lease liabilities that big tech is hiding from their investors by not reporting them on their balance sheets. But, go ahead. What's a few tens of billions among friends? Go borrow some more. This is coming just yesterday after a story broke that some of the top talent in Google's AI research is leaving the company. We had a prominent researcher is leaving to start his own outfit. He's leaving Google. Also, the head of Google DeepMind is moving to a largely ceremonial role. He's handing control of DeepMind over to an underling. Big leadership shifts at their big in-house AI development segment. That's a good thing, right? That's an indicator of success when you see a bunch of guys jumping ship. No, that's not how that works. Hey, Softbank is over here saying, hold my sake. I also want to borrow money. Softbank has completed a $10 billion margin loan that is borrowed against their stake in OpenAI shares. Now, this story is interesting. They were originally going to borrow $10 billion, and then a few months ago, they cut it to $6 billion because they were having a hard time finding lenders willing to lend to them. And then in July, they announced, we're going to take another shot at 10. We're going to sweeten the pot, though. We're going to add all kinds of guarantees and protections, 10 with benefits, if you will. Well, they were finally able to get that done. So Softbank has borrowed another $10 billion, which will be handed right off to OpenAI so that they can burn it. This is on top of the $40 billion bridge loan that Softbank took out against their stake in OpenAI earlier this year. Again, to hand that money right to OpenAI so that they could burn it. Softbank now has a $65 billion position in OpenAI, funded almost entirely by debt. So that's fun. The people who lost billions of dollars on WeWork now have basically bet the entire farm on this one company that apparently the books are so ugly at this company that the CFO does not want to let the company go public because she's afraid to open the books and let everybody see. Of course, Sam Altman needs to cash out, so he's probably going to push it anyway. I don't know. A lot of people starting to have doubts about whether they ever get this IPO done. And if they don't, Softbank is just absolutely hosed. All right, the other big story going on this morning. Shout out to my moderator, Mish, who found this one. I don't know what to make of this story. The Iranian state oil company has had their bank accounts frozen by an Iranian state-owned bank. Okay. So the Iranian government basically froze its own assets. Guys, I don't know what to tell you here. The National Iranian Oil Company, or NIOC, has had their accounts frozen by the Bank of Industry and Mine. Apparently, NIOC owns billions of dollars to this bank. They also owe billions of dollars to the Iranian Sovereign Wealth Fund, thanks to U.S. sanctions and, of course, the war. Iran State Oil Company can't borrow from banks of the world, so they have to basically borrow from within the country. The Sovereign Wealth Fund has turned into a bank of sorts. If you need to develop an oil field, you have to borrow from the Sovereign Wealth Fund. Well, ever since the U.S. blockade, the oil stopped flowing. The Iranian State Oil Company can't pay its bills, and now the Iranian State Bank is saying you're cut off. But they're owned by the same government, or are they? We hear a lot about how the IRGC, the Iranian Revolutionary Guard Corps, that's the wacko fundamentalist arm of the Iranian military, how they basically control the oil industry. And then you've got this state-owned bank, maybe not as directly controlled by the IRGC. They're cutting off their access to funds. So is this infighting within the Iranian regime, the bank and the oil company, the IRGC and the regular government and the Ayatollah that we haven't seen since he had his leg blown off in February, or at least that's the rumor. Is the guy even alive? We don't know. Maybe we could get a little bit of a Mitch McConnell thing going, a little proof of life for the Ayatollah. I don't know, just a thought. Or maybe we could send the Ayatollah and Mitch McConnell off to the same pasture to live out their days far, far away from us. Just an idea. I throw them out there. You guys do what you want with them. What the hell is going on inside Iran? I don't know. But look, there's all kinds of talk about, the U.S. stockpile is low and the price of oil is this and we're draining down reserves. And sure, all of that is going on. War is hell and it hurts. And even if war is going well, it still hurts. There's still casualties. The Iranians are doing damage to the entire world economy. But everybody, I think, is so eager to maybe punish Donald Trump for starting a war, which arguably we never should have started in the first place. There's a perfectly good case to be made for that, and I'll probably agree with you. But I think people are like taking that so far that they're almost acting like Iran has the whole world by the balls. To a certain extent, they do. But let's not act like things are going well in Iran. This whole conflict kicked off because you had a bank failed in Iran earlier or late last year. And then there was protest because so many people lost money and inflation got so bad that the government started killing thousands of their own people. And then, of course, the United States saw that as a sign of weakness. We're convinced by Israel, and we're like, yeah, let's just go ahead and try to finish the job and topple the regime. We overestimated how much support we would get from the Iranian populace. It never materialized, and now we're stuck in this quagmire. But Iran is kind of screwed too here. And if they're state-owned oil company, which is like the entirety, it's a state-owned monopoly. If their accounts are frozen, how are they paying people? How are they paying the crews of their shadow fleet tankers to run the blockade? How are they paying for parts? It's just a total mess going on over there. But honestly, as far as like the internal like palace intrigue going on in Tehran, I couldn't tell you what the hell this means. Now, as that is all going on, we've got Iran and Oman are supposedly negotiating a deal to control the Strait of Hormuz, which is basically Iran negotiating with itself, and the Omanis are going to, I guess, do whatever the Iranians tell them to do. While that's going on, President Trump is negotiating with himself, saying, trust me, bro, a deal any day now. This has been going on for several months. When two sides of a conflict are each negotiating with themselves only, there's not really any negotiation going on. Try telling that to the oil futures market, though, because oil's up like 70 cents a barrel today. The deal's probably the details of which are going to get announced later today. I think it doesn't matter because if it's a one-side negotiated deal, it's not really a deal, is it? It's just talking points. Saudi Arabia is lowering the price of its oil from $1.50 a barrel cheaper below the regional benchmark to $2 below the regional benchmark. So what does that mean? That means for a VLCC, or a very large crude carrier, an extra $1 million to sweeten the pot to try to convince a crew to gamble with their lives and run the blockades. That's what the Saudis are trying to do. They're having to lower the price in oil in order to get the oil flowing. Saudi Arabia also not getting off scot-free. Nobody's getting off scot-free in this conflict. The whole freaking world is suffering for it. Meanwhile, we've got several hedge funds and private equity firms have been targeted by cyber attacks. Gee, you think the Iranians had anything to do with that? After the Iranians hacked the water system in Michigan and Minnesota last week, and President Trump tried to blame that on Tim Walz. There's plenty you could blame on Tim Walz. That's not among them. But yeah, so that's fun. They're hacking our financial system now. No words about any funds being stolen or anything like that. All the funds, of course, are saying customer data is safe, as they always do. We've got Congo is banning copper and cobalt concentrate exports. That's interesting because copper supplies a hell of a lot of copper to the world. Congo supplies a hell of a lot of copper to the world. Second largest supplier behind Chile. And, they're banning their exports, which means the price of copper has hit an all-time high. You know, that red metal that's going into data centers, and they're buying up a whole miles and miles of copper wire to build these silly data centers. Well, that's getting even more expensive now. We had a flash crash last night in SK Hynix. The Korean markets remain volatile AF. Wait till you see what it took to send shares of SK Hynix down 30% in the blink of an eye. One guy with fat fingers and very little dry powder caused that crash. And of course, people are saying this is a sign that the worst is behind us in South Korea. No, it's not. And last but not least, Blackstone's business development company, the Blackstone Secure Lending Fund. We talked about this one a couple of weeks ago when the CEO abruptly resigned, and then he had resigned on a Monday. We didn't find out until after close of business on Friday. A lot of people were like, you held on to that one for a little while, Blackstone. Well, now we know why he left. Profits at that fund are down 94% from a year ago, and that's after using things like extended pretend and PIK payment in kind in order to inflate the numbers. Yeah, things not going well in private credit. Stick around for the end of the show for that one. But first, we must shrink my big melon of a head and let's see what's going on in the world today, shall we? Don't forget that like button and that subscribe button so you can come have your coffee with the melon heads tomorrow, because we do this every business day. Right now, the S&P has just fallen into negative territory for the day, down 1 point, or 0.02%. We've got the Dow is at another all-time high, up 78 points, 0.15% higher this morning, although heading lower over the last few minutes, still in positive territory. And the NASDAQ is deep in the red this morning, off by 247 points, or 0.84% in the red. We've got the U.S. dollar is higher by 10 basis points this morning, 99.79 for the Dixie. Looking over at the bond market, we've got yields are higher once again. Pay attention, because remember, yields are rising, and the premium above treasuries that Google is having to pay is also rising. The 30-year yield is at 5.192. That is higher by almost 2 basis points. The 10-year yield is at 4.649, higher by 3 points and change. The 2 years at 4.216, higher by almost 4 points. And the 1-month treasury, 3.690, that's higher by 1 basis point. Looking over at the commodities board, we've got metals are taking a breather after having a ripping day yesterday. Spot gold, 42.32, very briefly above 4,300 for spot gold this morning. Now we're down 15, 16 bucks, or about 0.38% in the red. Gold had one hell of a day yesterday. Also hearing stories about a lot of Chinese buying in gold ETFs. That something like 11 days in a row, there have been net inflows into Chinese gold ETFs. That's after several months of net outflows following the price crash in January. So it seems like the Chinese dip buyers have arrived, and that was helping to drive some of those gains in gold earlier this week. Spot silver is also down this morning, down 90 cents, or 1.45%, sitting at $61.15. Spot silver went as high as $62.90 this morning. I like the shiny. We've got copper at an all-time high here, $6.74. That's higher by about 2 cents here, or 0.3%. We'll talk more about copper in a moment. Platinum is lower by 0.36%. Palladium is unchanged for the morning. And WTI crude is higher by $1.40, $76.64 for September WTI futures. Looking over at Bitcoin, we are at 64,543, relatively unchanged for the morning, lower by about 60 bucks. Not a lot happening in Bitcoin this morning. But here is the big one. Alphabet is seeking up to $25 billion more from its latest bond sale. They have burned up all their free cash flow. They're hiding hundreds of billions of dollars of off-balance sheet debt through special purpose vehicles and unreported lease obligations, and they're just going to go ahead and borrow $25 billion. Oh, and they're also issuing shares. Yikes. Alphabet is looking to raise as much as $25 billion from its latest U.S. investment-grade bond offering, according to people familiar with the matter, in a deal that will test investor appetite for AI-related debt following a July sell-off. The Google and YouTube parent is offering notes in as many as 10 parts, with maturities ranging from 2 to 40 years, a separate person said. Initial price talk for the longest tenured tranche is a premium of about 1.55 percentage points above treasuries. Again, guys, when they borrowed back in February or May, it was 1.2% above treasuries. So not only is the treasury interest rate rising, but the premium above that is getting wider that Google is having to pay. That's because the market keeps telling Google, cut the damn CapEx. Anyways, yeah, about that. What else we got going on here? Alphabet's offering comes 2 weeks after the company raised 2026 spending outlook to help trigger fresh worries about whether massive AI investments will pay off. They won't. Investor appetite for bonds to help fund those expenditures cooled in July as Alphabet increased its forecast to as much as $205 billion, more than double 2025's already ridiculous outlays. I may have ad-libbed a little bit there. Alphabet, which sold more than $50 billion of debt in the first half of 2026, and Amazon have led the AI infrastructure borrowing spree. Alphabet last tapped the U.S. high-grade debt market in February before selling bonds in Swiss francs, British pounds, euros, Canadian dollars, and Japanese yen. I mean, I don't know. Why are we going back to dollars? I think there's a few currencies you didn't borrow. I mean, look on the bright side. Google hasn't borrowed any Polish zloty recently, so you got that going for it. Maybe there's still room to run, baby. It also issued nearly $85 billion of shares 2 months ago. They are literally borrowing all the money in the world. Capital spending contributed to Alphabet posting its first quarter of negative free cash flow since its 2004 initial public offering. How to destroy a perfectly good company in one easy step. And as this is going on, there are signs of bad news. Google AI veterans depart during seismic leadership shift. A seismic shift in leadership is usually a sign of good things, right? You do that when things are going really well. Alphabet's Google is losing some of its most prominent AI veterans in a seismic overhaul that is casting doubt over leadership of a critical area of growth right as competition intensifies. Alphabet shares fell 4% yesterday on that news. Jeff Dean, a longtime Google employee central to the development of the company's AI strategy, is departing to launch a startup, taking several high-profile colleagues with him. Demi Hassabi, the head of Google DeepMind, is also moving into a chairman role at the lab. In the new structure, Hassabi will assume the dual titles of chairman of Google DeepMind and chief scientist of Alphabet. He's handing over operational control of the lab to Corey Corey K is getting he's going to be handed operational control. That's a longtime deputy who has been promoted to senior vice president of Google DeepMind and will report to Alphabet CEO Sundar Pichai, the company announced Wednesday in a blog. Google had already lost 2 prominent staffers earlier this year when Nobel laureate John Jumper left for Anthropic and star researcher Noam Shazir went to OpenAI. One staff member characterized Wednesday's departures of veteran staff as an earthquake for the organization. They declined to be named because they weren't authorized to speak publicly. Despite pouring tens of billions of dollars into AI infrastructure and talent, Google has faced criticism that it's been too slow to turn its world-leading research into tangible progress in areas that matter commercially, like AI coding. The shakeup also comes as the flagship version of Google's latest Gemini model has faced a months-long delay despite a planned June launch. All right, so top researchers leaving, executives jumping ship or being demoted. Yeah, not really a good sign. Alphabet stock was down 4% yesterday, off by another 0.9% this morning, $356.91 for Google shares. Hey, Softbank's borrowing money too. Softbank secures $10 billion margin loan backed by OpenAI stake. Another $10 billion of debt backed by their OpenAI stake. And what are they going to do with that? They're going to give it to OpenAI, of course. Softbank has secured a $10 billion margin loan backed by its stake in U.S. tech giant OpenAI, marking another fundraising milestone in its bet on AI. The company entered into an agreement with Goldman Sachs Bank, JP Morgan, Mizuho Securities, Apollo, and Sumitomo for the 2-year loan on Wednesday. I think they may have missed a bank or two. I don't know. SoftBank said in the latest financial report, the financial institutions are the mandated lead arrangers for the loan, which the borrowers plan to draw down this month, it added. SoftBank is the guarantor of the borrowing, which will be used for general corporate purposes for the group and its Vision 2 fund, according to the disclosure. The loan requires the borrower to post cash or repay early under certain conditions, such as a drop in the value of OpenAI's preferred shares. The margin loan follows a record $40 billion bridge loan that SoftBank secured for its investments in OpenAI. That facility attracted a new group of 21 lenders in a broader syndication phase last month. SoftBank's total investment in OpenAI is slated to reach close to $65 billion by October, funded in part by loans as investors grow weary of rising debt and uncertain returns on its biggest bets. More money borrowed, all piled into this single crowded AF trade of artificial intelligence. I mean, literally all the world's finances have been dumped into this one trade. that has not produced one lick of profit for anyone outside of hardware sales yet. And there's every day there's some other a-hole is on Twitter talking about revenue run rate or, oh my God, look at all this revenue growth. Guys, revenue isn't profit. I don't know at what point the whole world seemed to forget that revenue isn't profit. Revenue is money coming in. And if there's money going out even faster, then it doesn't matter how big your revenue ever gets. You're going out of business eventually. Everybody in AI is losing money. Everybody except the hardware sales. All right, and as we talked about in the opening, guys, this one, somebody want to help me make heads or tails of this? I'm sure we're going to get all kinds of comments about people's pre-existing political dispositions towards this conflict. But honestly, I really don't know what the heck is going on here. Iran state oil companies' bank accounts frozen over debt, Fars news agency reports. The national Iranian oil company's bank accounts have been frozen by a state-owned lender over mounting debt, the semi-official Fars news agency reported on Wednesday, underscoring the strain being felt by the country's most important source of revenue. The Bank of Industry and Mine did not provide details about the amount owed or the accounts affected, according to Fars, which added that the move came despite provisions in Iran's budget law that deferred repayment of certain NIOC debts until the end of the Iranian calendar year in March of 2027. Separately, the head of the National Development Fund, or the NDF, said NIOC would not be able to repay the fund a nearly $17 billion debt using proceeds from the Azerbaijan oil field, one of the country's largest, as its development has been slowed by bureaucratic delays and administrative obstacles. You think maybe the little war that's going on may be slowing development as well? Just a thought. The repayment of NIOC's debt via this route won't work. There was hope for payment of debts via moves such as the cessation of other oil fields, but there's leniency in postponing due to current conditions, said Mehdi Ghazafari. He's the head of their National Development Fund. We hope that with the end of the war and a return to normal, this issue will be solved, he said, referring to the U.S.-Israeli war with Iran. So I'm willing to speculate here that this story is at least somewhat indicative of infighting within the Iranian regime, trying to put pressure on the IRGC to back off some of their more extreme demands. And it's also the mathematical reality that Iran does not have much oil getting out. Some is obviously getting out through rail or ships running the blockade, but most of it isn't. And there's very little oil on either side actually getting out. And so the oil company can't pay its bills and the bank is cutting them off. Now, as this is going on, Iran says a deal with Oman on the Strait of Hormuz is agreed in principle. I'm not going to get into this, guys, because it doesn't matter. It doesn't matter if there's an agreement to open the strait and the giant freaking navy that's blockading the one side of the strait isn't part of the deal. It's not a deal. Just like President Trump saying we'll have a deal by lunchtime every day for 3 months. If the other side isn't even talking to you, then it's not a real deal. Both sides are just negotiating with their own siloed selves, claiming they've got a deal, and somehow it's enough to keep the price of oil down. I don't really get it. Meanwhile, Saudis have cut the main oil price to Asia amid talk of a Hormuz deal. Saudi Arabia cut its main crude oil price for Asia amid talks on a deal to ease shipping through the Strait of Hormuz, even as threats by Iran-backed Houthi militants imperil an alternative route for eastbound flows through the Red Sea. State producer Saudi Aramco will cut its Arab light oil price for delivery to customers in Asia next month by 50 cents a barrel to $2 a barrel less than the regional benchmark, according to a price list seen by Bloomberg. Traders in a Bloomberg survey had expected the Saudi producer to leave its flagship price level unchanged. All right, so if you assume a very large crude carrier carrying 2 million barrels of oil, you're looking at a $4 million boost for the crew of that ship to try to run the blockades, or the owner of that ship, who almost certainly can't get insurance now that there's drones and missiles landing on their heads. Maybe a $4 million discount is enough to get them to take their chances. They're having to raise or lower the price and raise this premium for the ship owners because they can't go south through the Bab el-Mandeb. They can't go out the Strait of Hormuz, and it's increasingly looking like even going north through the Suez Canal is probably not going to be an option, or at least not a risk-free option, because the Houthis can still attack you there, as they've demonstrated recently, and the Saudis are cutting their price in order to compensate. Now, after all said and done, the price of oil is up $1 and change. That's it, 76.34, $1.27 higher. Uh, you know, okay, sure. 20 million barrels a day has been somewhat disrupted. Maybe another 10 to 13 million has been rerouted one way or another through Band-Aid solutions. The oil market is still really just whistling past the graveyard here. I don't know what to make of this, guys. I really don't. Is there some massive destruction of oil demand that has been going on for the last few months that somehow explains why the price of oil is still in the 70s here? I mean, the Chinese have cut their imports dramatically. That's playing a big role. Is that masking some kind of decline in demand going on in China? Or is everybody really just burning down their reserves and the market is pretending like they can keep it up forever? Don't know. Meanwhile, major hedge funds are targeted in wave of attempted cyber attacks. This one broke yesterday. Hackers launched a wave of sophisticated attacks on Wall Street firms in recent days, targeting information systems at major money managers, according to people familiar with the matter. Point72 Asset Management informed investors on Wednesday that it had been attacked, though the hedge fund's initial indications were that no client information was stolen, according to one of the people asking not to be identified. The firm told investors it was still reviewing the incident. Attackers also attempted to infiltrate the information systems at other major hedge funds, including Millennium Management, Two Sigma Investments, and Citadel, as well as several private equity firms as part of the assault. The attack featured voice phishing or vishing, in which cyber criminals use technology to mimic voices in phone calls or messages to trick employees into revealing sensitive information or granting access, the people said, asking not to be identified, discussing non-public information. All right, so they've got chatbots pretending to be people, calling people on the phone, trying to get them to hand over their passwords. Two Sigma, which oversees $75 billion of assets, said it thwarted the attempt to access sensitive data. Let's scroll down a little bit here. The incidents highlight a growing risk that scammers or rogue states will harness cutting-edge technologies to scale up attacks, sometimes demanding ransom to unlock data or systems. In Wall Street's case, that can impact firms and markets handling trillions of dollars in daily transactions. Though they may be unrelated, the recent spree unfolded as U.S. authorities were also racing to contain cyber attacks on water systems in several states that have raised concerns about potential connections to Iran. So, yeah, as World War III is slowly breaking out kinetically, it's important to note that, at least in cyberspace, World War III has actually been raging for a long time now. Today, no exception. And Congo bans copper and cobalt concentrate exports. Official order says price of copper is going even higher. Those data centers getting even more expensive. The Democratic Republic of Congo has banned exports of copper concentrate and cobalt concentrates as it escalates efforts to force domestic processing and retain more value from its mineral resources, a government order reviewed by Reuters showed. After Reuters reported the ban, benchmark 3-month copper and London Metals Exchange rose by as much as 1.8% to $14,369 a metric ton. That's the highest since January 29th, when the metal hit an all-time peak of $14,527 per ton. The ban was motivated by the need to encourage mine operators to market or export commercial mineral products with high added value. Congo has imposed bans on copper and cobalt concentrate exports before in 2013, 2019, and 2023, while granting waivers where domestic smelting capacity was insufficient. The latest order repeals the 2023 order and its exemptions and replaces it with a broader framework governing mineral exports and the taxation of economically significant mining byproducts. Congo mostly exports copper in the form of refined metal. It exported 696,700 tons of copper cathodes in the first quarter of 2026, compared with 53,900 tons of copper concentrates containing 18,800 tons of copper metal. It also shipped 51,900 tons of cobalt hydroxides containing 17,000 tons of cobalt metal over the same period. And now they are banning the export of those concentrates. They're trying to build up their domestic refining capacity. And the net effect of that, we've got copper copper at an all-time high here. It's now down from its highs this morning, $6.74. I think this is dollars per pound is what this is reported on here. Copper prices have been grinding higher, well, pretty much for the last 3 or 4 years here. And it certainly looks like this curve is accelerating to the upside as we go. Again, this is another chart that just has me screaming, cut the damn CapEx. As everything that you put into these data centers gets more expensive. That's the market trying to tell you something. It's telling you to knock it off. Meanwhile, check this one out in South Korea. Oh, you think the volatility is behind us? Flash crash briefly fells SK Hynix, while SocGen strategist says Korean shakeout is nearly done. A rogue print in pre-market trade sent SK Hynix stock down 30% lower. Yikes. In pre-market trading in Seoul Thursday, a tiny trade worth just $9,000 prompted a 30% plunge in the share price of SK Hynix. Although the stock recovered later, it still ended the day with another thumping 10% loss. The SK Hynix flash crash took place on the Next Trade exchange. That's a new facility only established in 2025 to allow Korean shares to trade before and after the official hours of the Korean Stock Exchange. A similar flash crash of around 20% occurred on the same exchange in late July. For one strategist, Manish Kabra at SocGen, this is now all too much. He's looking at the Korean market and its lodestar stock SK Hynix in particular and finding something surprising. He observes that the market is now trading on a 12-month forward price-to-earnings multiple that is 50% lower than its long-term average, while SK Hynix share price is discounting a profit margin of just 40% next year, whereas analysts currently have 83% plugged in the consensus. Well, Mr. Cabra over at SocGen, maybe there's a reason why the forward PE is 50% lower than its historical average. Maybe that's because the market is calling bullshit on that forward PE. Maybe that's because they're looking at the price of memory and the ridiculous move in these stocks and saying there is no way in hell that forward earnings ever materializes because they can't afford it. You know, do we need to talk more about Google and Softbank and Amazon and everybody borrowing all the money in the world in yen, Canadian dollars, and Chinese yen and euros and US dollars and Australian dollars and Polish zloty and Swahili, whatever they call it over there? Yeah, they're borrowing everything. That's why the PEs in South Korea are so low, because everybody knows it's never going to happen. It's not sustainable. SK Hynix, look at the chart. God, that is an ugly chart. All right, hey, this is fun. All right, vertical moves are great. Everybody's making money, but vertical moves always end this way, always. And I don't know how this guy at SocGen can look at this chart and be like, yup, clearly this is where it's going to stop, right here. This means it's going to stop because the forward PE is 50. No, the forward PE is 50% of what it usually is. Price to earnings multiples crash because people have no confidence in the earnings. That's why price to earnings multiples crash. Meanwhile, Blackstone business development company profit drops 94% while loan performance steadies. Well, I guess we know why the CEO of this fund abruptly left on a Monday, and then we didn't find out about it until that Friday after the market closed because their profits disappeared. Profit at Blackstone's publicly traded private credit fund dropped 94% in the second quarter as the value of holdings declined, though the performance of loans steadied. Net income at the Blackstone Secured Lending Fund amounted to $9 million in the 3 months through June. That's down from $155 million a year earlier, hurt by markdowns, according to a statement Thursday. The firm booked $137 million of unrealized losses, a more than 12-fold increase from a year earlier. Holy shit. Realized losses amounted to just $28 million, which means they're going to lose a lot more money. Still, the fund's net investment income was $174 million, was little change from a year earlier. Yeah, all of that is probably payment in kind. Basically, they're paying themselves with more debt to their portfolio companies. In other words, they're not actually making money. The business development company didn't move any additional loans into non-accrual status in the period. Again, if you're paying in PIK, you're not non-accrual. You're just, the debt is getting bigger. The $13.4 billion Blackstone fund's net asset value fell to $25.53 per share, down from $26.26 in the first quarter. That missed the $26.19 average estimate. Loans on non-accrual status amounted to 3.6% of the portfolio at cost, the company said. That's better than the 4.73% estimated by analysts. Payment in kind income declined during the quarter, as did the number of assets marked below 85 cents on the dollar, which is typically considered distressed territory. All right, so the payment in kind income declines. Next thing you know, profit drops by 94%. It's almost like without PIK, there is no interest at all. And that's what this article is saying without actually saying. And it's also interesting that this article is not mentioning the fact that the CEO of this fund abruptly resigned 2 weeks ago. I guess the cheerleaders in the financial press want to keep things a little positive. We don't want to beat on them too much. Hey, I just want to say thanks everybody for having your coffee with the Melonheads this morning. Don't forget the like button, and you new guys hit that subscribe button so we can see you tomorrow. Thank you also to my magnanimous Melonheads on Patreon, YouTube memberships, and Buy Me a Coffee for supporting the channel. You guys are awesome. Links down below should you feel so inclined. Hi, Mom. Hi, Dad. Love you guys. Everybody, till next time, live small and dream big.